BlackRock is recommending a 2% allocation to Bitcoin. And I think one of the best things about this allocation is that if you do put 2% of your portfolio in Bitcoin, you're not going to lose much. But if Bitcoin goes where I think it will, I think you're going to do pretty well for yourself. So let's go into the article first. This is from BNN Bloomberg. The world's biggest asset manager says that Bitcoin does have a place in multi-asset portfolios up to a certain point. Giving Bitcoin a 1 to 2% weighting would produce a similar risk profile to the so-called Magnificent Seven technology stocks in a standard 60-40 portfolio of stocks and bonds, according to a BlackRock Investment Institute paper released Thursday. That's a reasonable range to devote to Bitcoin, as anything beyond 2% would sharply increase crypto's share of overall portfolio risk, the paper said. So, for one mistake here, Bitcoin is not crypto. Bitcoin is completely separate from crypto. Crypto is an industry that's formed to take advantage of people, while Bitcoin is a form of money that is decentralized. It can be used by anyone. Anyone can hold on to it. Anyone can buy it. Anyone can benefit from it. So one of the things that really stood out to me on this article from BNN Bloomberg was, even though Bitcoin's correlation to other assets is relatively low, it's more volatile, making its effect on total risk contribution similar overall. Authors including Samara Cohen, BlackRock's CIO of ETF and index investments, wrote in the paper, a Bitcoin allocation would have the advantage of providing a diverse source of risk, while an overweight to the Magnificent Seven would add to the existing risk and to portfolio concentration. So, in my opinion, what I see here is that BlackRock thinks that you should take your money out of stocks, at least part of it out of stocks, out of real estate, out of bonds, out of the legacy assets, and you should put it into Bitcoin. So what will this do for Bitcoin? I think Bitcoin is going to take up a much, much larger portion of total overall wealth than it does today. Today, Bitcoin is a very small portion of overall wealth. In the future, we could see 5, 10, 15%. And that's because not everybody's going to go with 2%. A lot of people are going to go with 5%. People are going to go with 10%, 15%, 20%. I like to refer to this picture from Jesse Myers on Twitter. You can see the username here, Croesus_BTC. So in this, you can see Bitcoin is a $2 trillion asset, and in total, global assets are worth $900 trillion. So Bitcoin isn't even 1% yet. Once Bitcoin is at $9 trillion, we'll see 1%. So based on this 2% allocation, so if money is being taken out of everything else and put into Bitcoin, let's say we stay at the same total global asset value, Bitcoin would go to $18 trillion. $18 trillion would mean that Bitcoin would have to 9x from here, and you would have a $900,000 Bitcoin. And I think 2% is very conservative. I think Bitcoin could actually replace bonds completely. It could replace money completely. It could replace a lot of real estate, because a lot of money that's going into real estate is just people buying houses because they think that real estate is a great store of value. Also, equities, I think it'll take a much bigger chunk of equities, because a lot of people are buying the S&P 500. A lot of people are buying stocks just passively because they don't know what other way there is to store value. So what they're doing is they're just having part of their paycheck go right into the S&P 500. I used to do this personally. I know a lot of people who do this. We also have gold. So gold is a direct competitor of Bitcoin because gold is being used purely as a store of value by most people. What people do is they take gold, they buy gold from the market, and they just put it in their vault. They put it in their safe. So what they're doing is they're predicting that in the future, people will want gold. But what happens if people no longer want gold as a store of value? How much lower would this number go? How much lower would real estate go if people no longer use it as a store of value and only as shelter? How much lower would bonds go if people figure out that bonds are paying you out in a form of money that can be created out of thin air, and they no longer want to hold the bonds that exist in the current market? Same thing with money. Money refers to, let's say, euros, pounds, dollars, yen, won, all the currencies that we have around the world. That's what money refers to. So I think Bitcoin could take over a much larger portion of this total overall global asset value. One of the reasons why I do think that a 2% allocation to Bitcoin is great is because of this calculation that I did here. So I used 35% annual returns for Bitcoin for 10 years with monthly compounding, 30% for the following 10 years. So over the next 20 years, you'll see 35% for the first 10 years, 30% for the following 10 years. So you'll see in total, Bitcoin will go from about the $100,000 that it is today to about $60 million, which is a lot higher. It may seem completely far-fetched, but when you look at these numbers, I don't think it is, because Bitcoin can extract value from every other asset that exists. It can extract value from all of the money that will exist in the future. There will always be more and more money being added to the system. So I don't think that these numbers are ridiculous. We also consider that you have 7% returns on stocks. So we can see here, if you have a 0% allocation to Bitcoin and you have a 100% allocation to stocks, you end up with, of course, 0% Bitcoin and $403 in stock. So if you start off with a $100 portfolio, $100 portfolio, you end up with $0 in Bitcoin and $403 in stock. So your stock portfolio would have gone up 4 times based on these 7% annual returns. If you have a 1% allocation to Bitcoin with these returns and a 99% allocation to stocks, and you start off with a $100 portfolio, so you put $1 into Bitcoin, $99 into stocks, you'll end up with $609 in Bitcoin and $399 in stocks. One thing that you should focus on is the final portfolio value. So look at how much the portfolio value has increased with a 1% allocation to Bitcoin. While I don't think that Bitcoin will ever go to zero, you should also consider that if this portion goes to zero, what are you left with? You're left with $399. So if you start with $100, instead of going to $403, you'll end up with $399. You can make up for this if you want to by just increasing your income, but I don't even know if that's necessary. The difference is so small from having a 99% allocation to a 100% allocation in stocks. The difference is so small that it's pretty much irrelevant. It won't really make a difference in your lifestyle. But if Bitcoin does what I think it will, look at the difference in the size of your portfolio. You would have ended up with 39% stock. You would have gone from 99% to 39% stocks, from 1% to 60.4% Bitcoin. If you go to 2%, so this is the number that Blackrock is recommending, you would have lost out on $4 or $8 worth of returns if you started with $100. If you started with $100,000, you would have lost out on about $8,000 worth of returns. But let's look at the other side. If Bitcoin goes where we think it's going, you start off with $100, just your Bitcoin alone would be worth $1,200 in 20 years. That's with a 2% allocation. So you're starting with $2 worth of Bitcoin versus $98 worth of stocks. You end up with $1,200 worth of Bitcoin and $395 worth of stocks. You end with a 75.5% allocation to Bitcoin. If Bitcoin returns these numbers, you end up with only 24.5% in stock. And keep in mind, there are people who are just going all out with Bitcoin. Some people are going with 5%. So they end up with 88% in Bitcoin, 11% in stocks. People go 10%. They end up with 94% in Bitcoin, 5% in stocks. 20%, you end up with 97% in Bitcoin and 2.58% in stocks. Keep in mind that these numbers could be wrong. We could see the returns being front loaded. Let's say, for example, for the first 10 years, we see 100% return over and over again for the next 10 years. And then Bitcoin becomes the world reserve currency and we drop to, let's say, a 3% return in the following 100 years. Let's say Bitcoin just becomes the world reserve currency and Bitcoin's purchasing power increases only by 3% after we have full adoption. Another major difference that I want you to take a look at here is if you had 100% in stocks, you end up with $403. If you start with a $100 portfolio, you end up with $403 worth of stock at the end of it. Your portfolio is worth $403. If you go with 1% Bitcoin, you end up with $1,000. If you go to 10% Bitcoin, you end up with $6,000. So your portfolio would have 15x'd from 100% stocks. But if Bitcoin goes to zero with that 10% allocation, you'd still end up with $363 worth of stock. So you would have lost 10% of your portfolio if you took the risk and bought Bitcoin. You would have obviously have 90% in stock, meaning that that 90% will still continue to grow. It'll still give you those returns that you want. But if it does go where I think it is, again, like I said, your portfolio will have more than 10x. And if we compare the maximum allocation to Bitcoin with 0% in stocks, you get $61,000 in your portfolio at the end of your 20-year term. I think Wall Street is going to catch up to this. I think this is going to make it a lot easier for financial advisors to advise Bitcoin, to tell their clients to buy Bitcoin. So Bitcoin is going a lot higher than where it is today. Most people have no idea this is coming. Most people have no allocation to Bitcoin. Most people have no clue what this could be. They still think that it's a Ponzi scheme. They still think it's a pyramid scheme. They still think that it's digital tulips. So with BlackRock's 2% allocation, I think the floodgates are about to open. I think people are going to go much, much bigger on Bitcoin. They're not going to go with a 2% allocation. They're going to go with 3%, 5%, 10%. I think as people figure out what Bitcoin is, and over the next few years, as Bitcoin just pretty much blows everybody's expectations out of the water, more and more people are going to allocate more and more to Bitcoin, because why would you sacrifice 98% of your portfolio by buying legacy assets when you know that they're going to underperform against Bitcoin?